gainer right now, and if you've missed out on the trade today, it's just about 4% away from its 52-week high. M&M, in fact, is even trading in line with historic valuations. So it's not like, after the big rally, it's not like the valuations are too expensive. It's currently trading at 17 times FY24 and 16.5 times FY25 price to earnings. This is in line with the historical average of around 16 times. So maybe there's more valuation headroom as well. M&M will be now starting the bookings of the new XUV 400 electric vehicle that happens from the 25th of Jan, and they have huge plans in the EV space. XUV 400 is the first electric vehicle from the Mahindra stable, and they're looking to target the B and C SUV segment, which is a total cumulative 90,000 units per month. These are ICE engine SUVs that are currently sold, the traditional engine SUVs, but they are looking, that eventually these will transition to EVs, and hence they will be the beneficiaries of that. They're also setting up a 10,000 crore EV plant in Pune, and they are looking to become the #1 player in the SUV market. Currently, they have about 20% market share. That's the revenue market share of M&M. In fact, Deepak Shenoy, founder of Capital Mind, joins us now to talk about that. Deepak, good afternoon. Happy New Year to you. Good to see you on the channel. Since we're talking about M&M, I had a chance to test drive the new EV, and it was not disappointing at all. Very good, very good space to get into for M&M, and they have ambitious plans here. But from a stock perspective, do you see more upsides, or are the valuations at peak levels now?
Yeah, thanks, Sonia. Firstly, very happy New Year to all of you and all the viewers at CNBC-TV18 as well. We own M&M, so honestly, I would say the price, in the next 2 or 3 years, I expect it to only go up from where it is. Of course, it may have some choppy volatility. That's fine. But the reason why, one of the reasons I think it's been outperforming other PV players is actually it's taking PV market share, and the PV game, the place in the PV segment is moving towards the SUV, maybe thanks to some really bad roads, where your sedans don't seem to do so well, but also because the affordability in India seems to have gone up. They've launched the Thar today at, I think, between 10 and 14 lakhs. So a very good price point for what is a kind of a legendary car in a way. And also they have the XUV 400, like you said. I drove the XUV 700, which is, I think, in terms of features and the stuff that they have in the car, it's pretty much top notch in comparison with even some of the German manufacturers. For a price tag of around 30 lakhs at the top end. So I think they've got the price points right on almost all of their SUV products. Even the Scorpio N is selling like hotcakes. The 700 is booked for a year, and I know because I've booked something, and it's still going to take another 6 or 7 months before I can lay my hands on it. But so I think from that perspective, they're doing well. Plus, they have the other businesses as well, as M&M being the holding company of a lot of other companies, including TechM, including Mahindra Life, including a bunch of other auto OEMs as well. So I think you get this, conglomerate sort of effect here. Plus the leadership in the PV, SUV or SUV cross space. I think good place to be for the next few years, apart from the tractors and stuff.
Deepak, afternoon, Rima here, but do you get a sense that the market share from here on could get a little more fragmented, split between the other players? Right now, M&M has leadership in SUV, but Maruti has grand plans to enter into SUVs aggressively. Come calendar year 2025, the Korean, the German, all of them will enter into the electric vehicle space as well. So right now, Tata Motors is dominating it because it has an early mover advantage. If you want to go out and buy an EV right now in India, it's only largely at Nexon, which is dominating, and that's the only option that you have, which is why they have an 80% market share. But in 1 or 2 years, a lot of the other companies will be entering in. So do you get a sense that the best perhaps is maybe behind M&M and Tata Motors, and market share will get more fragmented?
So I think next 1 or 2 years may be difficult, Rima. Here, the problem really over here is adoption is based on how much India gets capacity, especially in urban, of recharge facilities. Right now, recharging still takes a significant amount of time, and there are not enough places to be able to recharge, especially if the market share of EV grows from here. So I think the adoption is going to be a little bit slower than we think. We are looking at 2027 as a time when the phase shift really happens for EV to take over. The XUV 400 is interesting. Tata Nexon, as you said, it's one of the leaders in the space. There are the higher end German car EVs that are coming in, including from Volvo and Mercedes and so on. That will probably take away some part of the urban market as well. But I think in terms of EV, the penetration will, it'll still be very slow. So while, I think that may be a factor in terms of Tata playing a share, it's in all of these companies, it's a relatively really small portion of their overall revenues for the next 2 or 3 years. After that, things will change, but by that time, we would have a much better electric recharge network, a different set of facilities, and I think two-wheelers will also come in quite strongly in the EV game by that time. That's when I think this phase shift will happen. Right now, I think it's really small and like you said, fragmented, but it's too small to make a major difference right now.
Okay, that's about autos. Wanted to get your thoughts in on telecom. And before that, just for the benefit of our viewers, there was an interesting note which came out from CLSA on the different telecom companies. So Bharti Airtel is CLSA's top pick in the sector. Target price is 1,040. The reasons why CLSA likes Bharti: one, it's trading at a 10% discount to the 5-year average. Two, they expect Bharti Airtel to lead the tariff increase, and they expect ARPUs of Bharti Airtel to inch up to 236 versus current levels of 190. 5G rollout and early monetization of the high-end 5G subscribers will only add to the upside. And finally, they say Bharti's debt is comfortable. On Vodafone-Idea, they have a sell rating. Target price is 6 rupees. They're concerned about the falling market share and lack of clarity on their fundraise and AGR relief. They've also upgraded Tata Communication, which is an enterprise play, B2B. Unlike a Bharti Airtel or a Vodafone-Idea, which is B2C, they have upgraded Tata Communication to an outperform target price 1,646 on the back of accelerated double-digit growth. Indus Stars, they have downgraded. Now, remember, CLSA has been very bullish on Indus Stars, but that call has not worked for CLSA because Indus Stars has been an underperformer. So they're saying that despite the valuations being very cheap and attractive, the problem is the lack of clarity from Vodafone-Idea, its financials, because Indus Stars has a lot of receivables from Vodafone-Idea. They've already written off 3,000 crores, but is there more to go? And that's a bit of a concern. On Sterlite Tech as well, there is a downgrade from a buy to an outperform, target price 200. And here they're worried about the rising debt levels of Sterlite Tech. Deepak, thoughts on any of these stocks that I spoke about?
So Reema, we have Airtel in our portfolio, so bias there. We have Reliance in our portfolio, so bias there as well. I think they're the two winners of the telecom mobile space game here. I think here you've got a problem in Vodafone having 200,000 crores of debt and with almost no clarity on what happens going forward. They have negative equity of 75,000 crores. So, you've got to bridge that first, because at some point, banks are going to be like, we don't want to lend any more to this company to fund. Of course, bank debt is relatively small. I think 25 or 28,000 crores of total actual debt, and remaining all is government AGR dues. The government isn't willing to convert its AGR dues into equity until the promoters show some interest in infusing more capital, and the promoters haven't said they will, or they haven't yet done so. And you've got the fact that they have another deal with ATC, which requires either clarity on the government infusion or conversion to equity, or some kind of promoter cash infusion, both of which haven't come. So you're sitting in limbo on the balance sheet. The operation seems to be okay as of now, as long as they don't want to invest too much money into 5G. I think this is a company on the edge. I would say, it benefits, of course, me to say that, because I own their competitors, but it is a concern, and it will affect downstream players like Indus Towers and some banks as well, who have some exposure to Vodafone-Idea debt. But I mean, at this point, I think I'd still bet on the Airtel and the Reliance to take more of their market share away.
Okay, all right. Hi, Deepak. Deepak, I want to ask you about two big winners, which have made a lot of money for investors and highest in terms of pedigree: Bajaj Finance and Titan. It seems, when the top ranker in the class misses estimates a little bit, then the teacher is not too happy, right? But what's your sense? Both these two have given a bit of a dip. Your view on both these two, valuation-wise, there's not too much comfort, because obviously trading at upper end of multiples, and that's always been the case. Your take?
Yes, I think you've said that, Nigel, in your last statement, the upper end of the estimates on valuations in a time when interest rates are rising and thus valuation plays become less attractive. That is, I think, the real story here. In Bajaj Finance's case, one of the big reasons why I think it's made a lot of money in IPO funding. IPO funding last year, even in the December quarter, when there were those big startup IPOs, we saw 50,000 crores of IPO funding coming in from the likes of Bajaj Finance. And this time there's none of that. Of course, RBI rules have changed. You can't lend more than 1 crore to any individual person. But that entire book, which was fairly profitable for a Bajaj Finance, will no longer be available. And their loan growth has, not grown at the same pace as expected. So there will be that fear of whether those valuations can sustain. On the Titan front, I think, again, this is just a valuation correction. Estimates, of course, I mean, the problem is these companies grow, at least Titan grows at 10, 12, 13% and has such extremely high price to equity ratios that, you would want it to grow at 25% for 5 or 6 years before it can justify it. So I would say, coming down in terms of Titan valuations makes a lot of sense just as a normal correction without there being a problem at all. So in both these cases, I don't think there's a problem in the companies. There's a problem in the valuation. And yeah, we have some investments in one of them. So, it's not a huge amount, but we know that, the companies underlying are sound, but valuations, they're the vagaries of the market. And this market is not going to be happy in this high interest rate time to give very high valuations.
Okay, stay on. Need to slip into a very short break. We'll come back and discuss the way forward with Mithun Aswath of Kiva Advisors.